All right, ladies and gentlemen, I got your watch list coming into May 21st, 2019. Now, today was a very interesting day, surprisingly to a lot of people. We went straight up after some level of gap down. It looked like it was having some strength, and then we came down. But the most important part was that bounce or rejection or support, whatever you want to call it, though, at this level at 283.20 or 283.30. So we're watching for that tomorrow. We're going to watch what happens. We just got off of stream right now. Where was it? We were just streaming there, so we talked about it. I'm going to cover what happened. Trump and Jerome Powell just finished two independent separate speeches, but there was some implications, and now that's what we were waiting for to see what's going to happen tomorrow. I got to go over the plays with you guys. We have a lot of random plays, a lot to even talk about from continuation today. There were some good plays, and I'm going to go over some option strategy as well as specific options to watch. So you guys know what to do. Drop a like on the video. Subscribe if you're new. We post this watch list every single night at 7, but more importantly, you need a comment below. Post your watch list below and put the stocks you're watching. We want to source information. That's what that comment section's for. And best of all, we're live 30 minutes before open. It's pinned in the comments, youtube.com/thestockmarket. But most importantly, if you comment, you're going to be in a giveaway. Now that all of that's done, let us get into the plays. I'm sorry I have to do all that. I just want to make sure you miss it, but don't miss it. The main thing, though, is Apple and semiconductors. There was the Huawei news, and it had a reaction. There's two things. Remember, we're still waiting on China. However, there has been small moves that have been occurring, whether it be the Huawei ban, or also their reaction. So watch the chip makers, because this is something to note where Apple, I made a lot of money on the puts today, and you guys, if you remember even the play from this one, I'm actually up on this now, believe it or not, because what it says I'm down on is, is the insurance premium I held, but there's that play. It says $410. You remember that was down $6,000. And why I'm bringing that up, because Apple made a really big drop. So even after I sold out here today too, if you guys watch that, that was one thing to notice. And that's going to be a key for tomorrow. Even if we do get any level of drop, take advantage of the implied volatility when it's spiking, you guys, especially when they're holding it. You know, we sold that within 9 minutes of the market. I sold these contracts at $130 each. I got $1,300 for them. But where was that? As of 9 minutes in. So it was like right there. Pretty good timing. But if I didn't do it right there, those contracts were like 50-60% cheaper by the end of the day. So you have to keep that in mind. But watch Apple. I played Micron, and this is an option I'm going to show you, and I'm going to show you guys how to go over the chain on this. But watch Micron, because again, they had a big drop. Any of the semiconductors had a very big drop, even Qualcomm as well. And I think Qualcomm is really ripe for a movement. One, it fell below 80, and if it breaks this, I'm shocked. It would have taken a lot to do this. So by it coming down here is saying something. And again, why are the chip makers moving? It is based on the Huawei news, where China's making this ban, but now this is going to affect some of their future business, or they're even scared of potential retaliation. So it is not good for the chip maker stocks. And again, the index or the ETF, kind of like the UVXY or the SPY for it, is SMH. And you could see it got killed. But that's one thing related to the trade, because again, that is the keys we're watching tomorrow. But then also REMX. If any of you guys could find the ETF similar with better, I didn't like the options on this, and I'm kind of pissed off. Remember, if you were on stream, we saw this. It was like right here, and I thought it was pretty bad, but it just kept rocketing up. It was serious. It was surprisingly, it went up a lot. It went up for a lot at one point, but at the end of the day, you see it went from 50, 60 cents or 25 cents if you got it early enough. So that's how these ETFs are. But why? What is REMX? It's rare earth materials, and China said they're thinking about banning those. So if that's the case, that is related to semiconductors as well too. But China, some of the companies in China that make rare earth materials, they surge. So I'm surprised this went up, but maybe it's encompassing those. But that's a big move. And again, looking at the volume and everything, this thing doesn't move. So it could be prone for option mispricing, but could also be prone for overpricing, because there's all these unique factors with it. So watch out for that. That's what we're talking about here with everything related to trade and all that. But now, before I get into the other play, let's talk what happened with the Fed. Now, a lot of people were saying, because that was the speech today, and futures didn't really move too much. We saw futures come down, go up, come down, and now they're back up as we're talking. So if you guys are watching the stream, you're getting to see the timeline. We also watched, and this is going to be important to watch for tomorrow, the Chinese yuan. As the speeches started, as Trump started, even as the Fed was talking, it strengthened, weakened, and now it's all over the place. So I don't know how to interpret that, because again, it has to make a clear move, but it's weird because Trump didn't say much at the speech. But as far as the Fed goes, that's going to lead up plays that we need to watch with bank stocks. So watch bank stocks. I still like Square, but this is Wells Fargo. But watch them because if they slow and they move, we want them to level out. And also, we got Home Depot in the morning. They're going to report. This could be another good continuation off the earnings. But why I'm bringing this up after looking at Wells Fargo is I want the banks to kind of look like this. So we'll see how Home Depot plays out. But you kind of want it to edge down, hit a level. However, he was talking, Powell was speaking on, he was at the 24th annual conference at the Federal Reserve Bank of Atlanta discussing, the speech was called Assessing Our Current Financial Risks in the Financial System or whatever. So naturally, it was supposed to sound pretty bearish. He talked about CLOs. If someone wants to post the link to our CLO video, we discussed that a few months ago. That is like the new Big Short, honestly. That's what I think the video is titled. But he talked about the risks there and other stuff. It seemed very, bearish. But the one thing I'm taking to make an applicable play, he was talking asset prices. And he was saying asset prices aren't too high. He said things could quickly change and they're monitoring the risks. However, I'm thinking we have the Fed minutes in a few weeks here or a few days. If that comes out as they release the Fed minutes, it could signal a tone to a more hawkish Jerome Powell or a hawkish Fed, and people might not like that. Why? Just because if he starts saying asset prices aren't high, the market might take that as, okay, he's willing to let them come down a little bit, or, if they're not high, he's not really seeing them as a risk. But he kind of reasserted that, but he brought up a lot of stuff. Go watch my yield curve video. I was tripping out. He said stuff related to 2000, but there's that. And now as far as Trump, it was a rally. He didn't say anything related to China. A lot of stuff regarding, it was a very campaign effort. He did say some stuff regarding tariffs and wages and the currencies. It moved a little bit, but surprisingly, and this is what was surprising, regardless of what Trump said, the yuan in real time, because again, we were watching this, it was making moves. And that's what's weird because, again, we've seen it stable politically, where it wasn't moving unless there was a real catalyst or reason. So now it kind of looks like open market operation, but I wouldn't call it that because it's doing this straight pattern. And again, I don't think the open market is really down with buying more Chinese yuan considering what's happening. So that's what happened. Watch that. Where are we as far as the plays? We talked Bank of America, all that. My favorite one is going to be Disney. I am going to like Home Depot in the morning. We have to watch that. I said this. Some people got the trivia wrong, but I like Disney a lot. So I'll even say if this does come up on the trivia, REMX will be an underpriced play. This could either be underpriced or overpriced because I'm going to look at this tomorrow for sure. So somebody remind me. But watch Disney. That's going to be a very, very good one as it materializes. It's honestly the same realm as Qualcomm because both of these did what I was saying. So if Disney's holding up while Qualcomm gave up, honestly, I was expecting the opposite. I was expecting Qualcomm to hold up because the buyout and the intrinsic value added through the deal with Apple, but Disney's holding up. So watch both of these plays, and the options are fairly cheap because they had huge IV, and then over the days they haven't moved. So Qualcomm's still fairly cheap, but again, watch the frog pattern and how you guys could play that. But even Disney itself, I'm going to keep my eyes out on this because if that can materialize and set up, that could be a good play. Next, we're going to have Boeing. Boeing has been killing it, but today they went down, but I think they didn't die as much considering what the market did. They sold off, but they're going to be a good one. We just have to watch the news. However, more news did come out today that they said something of an update that it still may take a longer timeline for the 737 update. So I don't know. Keep your eyes out on that. I think it's a little bit weird, but related to even Boeing, it's not really related, but we played this. And again, I'm thinking relative strength because Boeing held up, but UNH. So we played this today. We made a nice 100%. I'm going to look to get back into this. So that is going to be another play. Let me see. I think those are the only ones I wanted to go. So let's actually take it to UNH now on the option chain. So UNH is one of the one. I want to look at the REMX. You guys, we're going to do those live. So somebody remind me, and we have to go because look, it's saying 1,600%, which is unbelievable. Well, we're going to have to go. We're going to talk about that a lot. But here's UNH. Why I like this one? We flipped this contract. So if you were there this morning, I told you guys which one. We was on the stream alerts. It was in the chat. So we're live 30 minutes before open. Make sure you guys are subscribed. I'm hyper today. I'm excited, man. I'm excited despite even some of the cuckening, so we will have to see what happens. But here is that 250. It's at $99. We bought this morning about 40 cents or 35 cents, 40 after commission, and then it shot up. I sold out around $98 or $1. A lot of people got in, so maybe that was us selling out at the end. I'm sure a lot of you guys made money, so make sure you keep it. If you made money and you don't know how you made money, learn how to keep it. Take the boot camp. I'm sure if you guys could attest for the boot camp, comment that below, and you'll get your giveaway entry as well too. But there's that. And at the same time, this is going to be a good play because I sold out of it. It made a good gain. But now I sold out of it because it's a weekly. And I think it'll come down. So this is going to be one we push to the wall. Let this make a move. Or if there's a drastic move in the morning that the market's not telling us, we could take it. However, I might buy it again if there's a big move, but it's not big relative to the market, because that's exactly what UNH did again today. This is why I've been playing it. Maybe you can't see it when it's overlaid as well. So let me put UNH here. And then the SPYs. Yeah. So let's go to the one-day chart so you guys can see it. What the hell? So take a look. The first day, remember, UNH was leading and just held up. It was kind of the same thing here. UNH didn't gap down, but it kind of had more strength. The market gapped down a lot more, but very, very quickly, UNH went up and it held up. It wasn't doing a lot of the up and downs, and really, even as the market was coming down, it was really even holding up, and that really allowed us to hold it longer. But there was random movements on it, and it's a slow mover, and you have to be careful. But if it shows relative strength tomorrow, I'm going to play that. So I'm going to watch those options and be hesitant, and also on the downside too, because if it even goes up and then it starts to give way to the market, those puts could be very good. But I like that play. The next one I want to talk about is Micron, and I like these because I sold out of some. I'm still holding one, and now these are the weekly, so I encourage you guys to go on the later date, even to the next week minimum. Remember, if you guys even watch, we talked about this on the stream the other day, this position. I was on this position, and I tell people, if you're going to sell premium, get time so you could hold it and make sure you're good, because I was down on this a lot, but by having time, I did good. But if you notice, anytime I get down, I was down 6,000 on that premium position. I was down on this one. I was down $6,000 on Boeing selling premium. Those were longer term premiums I sell. So that means the person who bought that option actually ended up, they were making money longer than I'm making money. I was losing longer than they were making money. So get time and be smart. But what I want to talk here is scaling in, and we did this on the 11 at 11 phone call. So make sure you guys follow me Instagram at the Trading Fraternity. But I got these earlier in the week. I got the 34s, I believe. So I got the 3450s, and now here's the funny part. I got these on actually Monday. So I think I thought I got them on Tuesday. I actually got them on Monday, and I think I got them at the bottom, and I think I bought them at 35. I thought I was really cool at close, but then when I ended up buying them, next day, it dropped. But now this is the point, scaling in and averaging down. What I'm trying to tell you guys, scaling in, I wanted to play this, and I'm telling you, don't put all your money in at once. So I wanted to spend about $200 in puts. So instead of buying $200 on that last Monday, what did I do? I put $40 on the first position. I waited, it dropped 50%, and then the next few days it was down. But then what did I do after that? I waited till Wednesday or Thursday, and I bought more, but now I was already down 50% on this, and if these dropped from 40 cents to 20 cents, I was like, all right, well, it's a little further out the money. I wanted something better, so now I went to the 3550s. I went to these ones, I believe, yes. Is it the 3550s or the 35s? No, it was the 3550s. And I went to these, and come Thursday, they're literally the same price. Even on Wednesday, too, is about $30. So what I did now instead, I spent the other $150, and I got 5 of these for 30 cents or 150. No, I got 4 of them because I wouldn't spend 150. That number always looks weird to me. I spent 120. I got 4 of them for 120. I was in 5 total because I spent that, so I'm in at like $170. But now this is the difference between, this is scaling in, because one, I made the first trade on Monday, the first $50, and now I buy more. But now the concept was, I was down on this contract 50%. Now, normal traditional averaging down would say, instead I should have bought, or instead of buying the other ones, I should have bought 10 of these, or I should have bought 5 of these instead and average down on the same contract. That's not how it works, especially if you understand expirations. I wanted to get closer to the money, so I went and I got the contracts that were the same price. These were the same $30 as I paid. It was the same price I paid a few days ago, but now it's $1.50 closer, a bigger percentage in the money. I got that, so I got 4 of those. They went up this morning about $4.20 each, so that's like $500 and something dollars. Sold out of that. I had that one, and I'm still holding that. So I made $500 off of a $150, $170 total, and now I'm still holding, and I'm in this play. So I'm gonna watch that now. So understand that strategy and do that this week, where if you guys are patient and smart enough with it, go little by little and wait for the play to develop. So on these days where you get cucked, you shouldn't get discouraged. You should just be saying, okay, hopefully the cuck lasts one more day, because then if you get, this is what happened, cuck here, you wait one more day, it holds up, and then boom, we got what we wanted on there. So that was the good part about it. So keep that in mind. But now on the next level, why am I putting this on the watch list? Why am I showing you this? Anytime I sell out of a contract for a huge gain, I like to keep watching it, because guess what? It could come back. So it might drop and fall out of the money, because that's why I'm not holding it anymore, for that reason. And if it does that reason, we could see. And if it makes sense to buy that player something closer to the money, we'll get to that. But watch those Microns. Another one I have, I'm not too fond of the option chain yet, because it's hard to say the pricing, because one, it just hasn't been moving. If you look at the 7 days, it really hasn't moved much. But if we see either weakness or relative strength with some sort of value type move, watch Walmart. The contracts are getting a little better. These are on the weekly. I'll even show you guys the June. But again, you're starting to see a little bit more capitulation. There's on the call side, but go to the Junes. You'll see something pretty similar when we start going through the trend. The calls are, okay, did they add more? Yeah, so here you guys can see these calls don't have history, because you see open interval there. That means they added, the market maker was willing to make, instead of $5 strikes, they added the 104, the 103, 102. So they just added those. That's why there's volume today. That volume will become the open interest tomorrow. But this one has volume and open interest. You get to see it. But this is what I'm telling you. It's been dying and dying and dying. So the move has happened. The premium's been fizzling away, and that's been the best part. So there's that. And guess what? Same thing applies. I bought 50 of these today. I got IWM instead of SPY puts, but I went out to June. I'm also going to start aiming for August as well too, because pretty much what I'm trying to show you guys, come down to some of the cheap ones, go through any of these chains, you'll notice they went up a lot. A lot of time has gone by now, so there's still 30 days, but that's why I said you could get even 60 days. I only get like $100 of these every week or so, $100 or $2 if I feel that there's volatility. And again, depend for the size of my account. However, the fact is what I'm trying to tell you, some of these were going for $1.05, they're down to 30. If these further capitulate and if we get the same volatility this week, but the stocks don't move and they depreciate, these plays are going to start being fire. So I scaled in some of those. I'd watch out for those and be careful. And people ask, why did I get IWM puts versus SPY puts? Take a look here. The IWM is Russell 2000. That's $1,500 a share. 100 shares of what? $150,000. The SPX is 2,800. 100 shares would be 280,000. Insurance. It's cheaper to insure a cheaper asset. A $150,000 car versus a $280,000 car. That cheaper one's going to have higher or a cheaper insurance. So I could buy protection insurance on a broader index for cheaper. And now, if there is a bigger move, it could end up benefiting me higher. There's something with a higher beta, but you don't even need, that's the thing. The higher beta is because of these factors. That's why I'm explaining this. So you guys, this is for the beginners and the advanced people. But now, even better, that index isn't the S&P. It's smaller cap assets, more risk, and it's not good. So the smaller, the less value asset, if there was an event, that is going to actually crumble faster, and it is more prone to risk because it's weaker and smaller. So that's why I went for those puts. If the SPY puts that's why I'm going to go for IWM. SPY puts get cheaper. We go back to SPY puts, and then we go for UVXY2, but it all depends on the volatility. That's why I said be careful. We even made a paper trade account to start testing all the trades. So any trades we make, if I make a real trade, I'm buying a short-term and a mid-term and a long-term trade to balance it all out. So keep that in mind, but be smart with it. Again, now coming to the market, even what do I expect tomorrow? I'm expecting more of a cuck or a decline. However, it all depends on the news. I'm only saying that decline just because we're not home free, but we did see it. I'll make a video. We had the Hindenburg indicator triggered today. I need to explain that, so I'm going to make it in a separate video. It doesn't mean we react right away, but I say cuck because with the pace they're going at so far from the weekend to now, they might start dropping news at the later end of the week, save the market for another week and push it in. But we will see, because even then, though, if the Fed could come out with something good, if Trump could BS some sort of positive news, it doesn't, again, the bearish sentiment is creating an opportunity for that one last rip in 2019. Again, as much as I'm a firm believer of some of the economics and what we see and negativity, I'm also a very firm believer in this bull rally and what we got left in it, especially the greater risk reward coming in before these times. That's why the volatility and fear creates this environment. So I'm looking both ways, and I'm looking at them. That even reminds me, I'm going to look at Amazon because I want some of that intrinsic value and delta and all that. So I'm going to leave it there. I'm going to stop ranting. Hopefully I'm not boring you guys. I'm really, really excited, so I better see you in the morning tomorrow, 30 minutes before open. In the comments, drop a like on the video. Get your watch list. Let's go!